Hello and welcome to all. This is Anthony, and on behalf of FP Markets, welcome to the mid-market brief. The whole concept of these meetings is halfway through the week to give you an update of everything in general, the markets, a little bit of general news, what's been happening on the economic calendar. So let's get jumped in and start. As we first topic we're going to cover today is the elections. Now, firstly, 2024 in recorded history is the biggest year for elections worldwide. It's estimated up to 4 billion people worldwide in their relevant regions and countries are eligible to vote. Whether 4 billion actually do is a different matter. However, a lot of focus is going to be especially on America with their upcoming elections. Hence the article here. The reason being is because it's very clear now it's going to be a Trump-Biden two-horse race. There is speculation that perhaps in May, Biden may be replaced due to cognitive issues. However, this is not confirmed. And as a trader for risk management purposes, it's imperative that you do not trade on speculation. Always trade off of facts and numbers that have come out. I will cover this subject in future and overcoming briefs to show you examples of this. So in this case, it's between Trump and Biden. Trump has actually won 5, going on 6 now, victories in a row over Nikki Haley, who has now stepped aside. So it is all down to Trump. Around August, we can expect the election to start heating up. That's when they have their conferences for the Democratic Party and for the Republicans. That is when we're likely to start seeing a lot more policies discussed, their mandate, what they're promising the people. So as the months go by, there's going to be preparation. And then during the summer period, we can expect a lot of movement around the US dollar, possibly gold, safe havens in general. This is also something that, again, for risk management purposes, if you do not feel comfortable trading the news, that is not the point of these calls. The point of these calls is to bring it to the table and you decide what you do with the information. Reason being is some people like to trade with the news and some people like to trade around the news and what's going on worldwide. They may not feel confident or have enough knowledge of that particular asset and the news relating to it. So in regards to this, elections coming up, a lot of focus will be on safe havens too. It's quite an opinionated matter. Therefore, what you consider may be a good result, depending on who wins the election, others may perceive as negative. So you could see a lot of action and build-up and speculation, and we will cover this over the coming months. The second thing was that Jerome Powell has been speaking, or testifying rather. This happened on Wednesday and it's going through to Thursday. This is all down to, quite simply, pressure to try and cut interest rates. When people like Jerome Powell speaks, President Lagarde or ex-President Lagarde speaks of the ECB, when they speak, their markets can react to that. And the significance here is that people are all eyes, especially in America, are on Jerome Powell to give indications that the economy is on track, that it's recovering, it's going in the right direction. Right now, it's been considered negative for the US dollar. The reason being is, however, they have acknowledged that there is inflation. That's not the argument here. They want to see a bit more data before they start considering cutting interest rates, is the general consensus from yesterday's testimony. Other things were discussed too, but in regards to this, the most important thing is to know that they acknowledge there's inflation, but they need more data to understand when they are likely to start cutting interest rates, because it's a timing thing. If you cut it too early or too late, it can have repercussions for the future. As we then saw, if we go to the MT4 platform, you'll be able to see the US dollar actually did drop down for a few consecutive hours against the Canadian dollar here on a 1-hour chart. So this news, when it came out, does have an effect, along with other economic data, which I will show you on the calendar later on. So have an eye on the US dollar, Canadian dollar, any US dollar related pairs in general, when it comes to Jerome Powell's testimony today. Going back to the news, we also had out of the UK the spring budget, a very extensive list from Jeremy Hunt to actually cover what their budgeting plans are. The reason this one in particular, because sometimes when it comes to budgets, not everybody sees the news come out, but this time it was very relevant because this is announced before the upcoming elections in the UK as well. So this is an opportunity for them to try and sweeten the voters and try and sway them over to gain votes. What we've seen from the budget, there's a lot to be discussed, but here's some highlights according to Sky News, which I will go over briefly. It seems to be across the board that they're trying to appeal here. We've seen that they come out with certain slight reliefs on the national insurance. You'll be gaining about £450 a year. Sounds good. However, when you break it down per month, it doesn't seem like it makes that much of a difference in the grand scheme of things. So when it comes to these spring budgets, if you are involved in the markets, if you have some form of economic knowledge in your mind, you know that these things sound great, but when you actually break it apart, it starts to actually seem less attractive. But, you know, it's the usual. They're going to try and go ahead to cut some income tax, which, you know, is great for self-employed. It's great for everybody. Although, again, every election, governments, presidents, regardless of the country, always promise to cut taxes. So people take it with a pinch of salt. And there's a lot of pressure on the UK government, especially the Conservative Party, because they have helped contribute towards a massive aid package to Ukraine. So people are starting to question, you know, why are you cutting here? Why are you putting money there when you are sending money to aid in a conflict, which is a valid reason, of course, we can all relate to. The usual increase in tobacco tax, alcohol tax, there's been an outcry from certain brewers. However, they have tried to say that they are going to try and keep tax at the same level to try and support pubs and local brewers. Yet to be confirmed, this is all promised and could be brought into effect in the near future. Like I said, national insurance cut was quite attractive, along with they're bringing out vape duty as well. So people that like to vape, they're going to have to pay more tax on the liquids they got. This has been a grey area for the UK. They haven't been taxing that as they should have. Fuel duty cut, they're trying to bring it down. At the moment, it looks like it's going to stay at its cut of 5p, which is not a great deal when you look at it over the course of the past few decades. Inheritance tax abolished. This sounded like a brilliant one, because when you're appealing to the voting public and you say tax abolished, it sounds great. It is good if you're going to receive inheritance, but we're talking there has to be certain criteria to be eligible for that. And the fact of the matter is, we also know that inheritance tends to be more of a middle class / upper class thing, people leaving behind, because there's a lot of people struggling who don't even have their own savings. This is the truth of the matter. So yes, this sounds brilliant, but who for exactly? The one thing that was appealing again, and I would say was a wolf in sheep's clothing, was the help for first-time buyers. People have an issue buying properties now, and they're trying to bring in this scheme where it's a 99% mortgage scheme, which sounds brilliant, which means that you have to put 1% of the property value as a deposit to get the house. So in theory, if you were able to find a house for 250,000, you would only need 2,500, and I'm sure there'd be a lot more criteria and guarantors needed and things like that. But it sounds so appealing, which will then be followed by a 30-year fixed mortgage period. Thing is, when you work it out and you break it, how much mortgage that means you would be paying each month with interest, with other economic effects that could happen over the years, such as what we've seen in recent years with the COVID situation. This is subject to change, perhaps. Tying you into a 30-year one where a mortgage could be £1,000, £2,000 a month, depending on the value of the house, basically then forces people to consider perhaps it is cheaper to rent. And then we go down the rental scheme, and people still stay in renting properties, and certain people own those properties to rent out. So again, this sounds brilliant, appeals to voters. When you break it down, it's not so important. If we actually look at how the British pound reacted to this, it kind of speaks for itself. Investors are not stupid people. They know, they can read between the lines, and they know what's a good sell and what's not a good sell. And this was a good sell if you don't know the economic news, but if you have any knowledge of the markets and how mortgages and things like that actually work, and taxes in general, you actually see the clearer picture that this is a lot of promising and they probably will be able to deliver on it, but it's not really going to benefit across the board in general. So this is subject to change as the elections heat up in the UK. They could start bringing out new policies and mandates and promises, but time will tell. I've got the British pound Canadian dollar here on a 1 hour candlestick. We can see after yesterday's spring budget, we can see that the British pound dropped. And if you compare it with other British pound pairs, they have suffered some downward fall as well. So we go on to the brief next subject, as it's general news, because we are living in a world where sadly we have conflicts and it is grim news. And I will not go into details of that because I'm sure it's something we read on a daily basis. However, we will talk about things that may affect the markets. And the one thing that is being talked about quite a lot at the moment, obviously around the Israel situation, is a ceasefire being put on the table. Problem is, I think we have too many parties involved here. The Americans are trying to draw up a ceasefire. I think Israel find it offensive that they're trying to draw up a ceasefire and they're trying to do one with Hamas directly. Hamas are claiming that they've not received the ceasefire agreement. However, Israel have assured us that they have. And now everyone's trying to concentrate on getting aid into the region. And we are approaching Ramadan, which is obviously a significant holy event of the year for Islam. So this is where people naturally would start to look at things like gold. Remember what I always said, that you don't trade speculation, you trade the facts. So there's always going to be speculation of things like ceasefire, but until the day it's signed, yes, the speculation might make something like gold move in a particular direction at a slight pace, but the moment something like ceasefire is announced, it's likely that gold would then drop right down. We wait for the facts and confirmation to come out rather than the speculation to play it safe. As you become more experienced and knowledgeable about the markets, you may be able to make your own predictions beforehand vis-a-vis speculation. But for risk management purposes, I always, when I'm talking to clients, we don't give financial advice. We encourage risk management. Trade with what you know, trade with the facts. So that's the Israel-Palestine situation. In Yemen, we've actually received reports of the Red Sea incident where 3 sailors now, it was 2 as of last night, but 3 sailors have actually perished on one of the ships that was hit by 2, perhaps 3 missiles direct on. This is a significant development. Again, will affect things like gold, possibly oil because of the logistics and going through the Red Sea. We're going to start seeing perhaps a few more ships taking a longer route around the Cape of South Africa. But this is also an issue as they would have to go past Somalia, which has also got a lot of pirate activity. And it has done for the best part of 2 decades nearly now. This costs millions for the shipping companies, and where are they going to recuperate that money? Obviously, it will affect the price of oils and supplies and manufactured products from places like China or India. So this is a significant, as again, this is not designed to be biased in any way. We're purely looking at facts. Regardless of your personal feel about the situation, you know that certain events are likely to push certain assets in a particular direction. And in this case, gold and oil seemed like the ones that could possibly be most affected here. It is likely expected that the British are going to retaliate with airstrikes. They have been conducting airstrikes for the past few weeks anyway, best part of a month. So this is more of a retaliatory move by the Houthi rebels. As you can see here, as mentioned, Houthi missile attacks killed 3 seafarers on a Red Sea merchant ship. So if the one thing that contradicts the Houthi rebels here is it was stated by them that they were specifically aiming for Israeli vessels or vessels that were bound for Israel. However, we've seen that stretch out, and other flagged ships owned by different nations have been hit and targeted. And this is a British ship that was targeted. So it seems that there is no accuracy, there's no specific target. They're going for whichever vessels they can do at the moment. More designed as a proxy war, perhaps from Iran back in to try and escalate the situation in the whole region. So if we actually go on to a more positive subject, let's have a look at the events for the week. We've got macros that have already come out. Interesting one yesterday. Obviously, Jerome Powell spoke and he will be speaking again today. And it'll be interesting to see. That'll be a follow-on from yesterday. And the reason that the second day is always interesting is because what they talk about then gets scrutinized by media and people like myself and people like yourself. And then he will be aware of this. So when he comes back, he might have different responses or a different vibe or in a different approach to the whole meeting today, the whole testimony. Yesterday, we got a precursor, which was the ADP employment change, which was predicted at 90,000, but came out 140,000. This is a significant development. And this could be a good sign for the NFP to push the dollar up on Friday when it comes out. However, this is just a precursor event. We could have the complete opposite result on Friday when the NFP comes out. That's not unheard of to happen. And also we saw Bank of Canada interest rate decision. They've kept it at 5%. It was predicted. Similar to America, it seems that they just want to sit back, absorb and wait for more data regarding inflation before deciding when to start making cuts on taxes or modifications as required. If we actually look at today's, we saw a balance of trade out of Australia. Australian dollar, always good to trade. Remember time zones though, when you're trading certain currencies, what might be your night time could be their market opening. So you need to just mentally be prepared for that, double check the news before you jump onto those currencies. We've got initial jobless claims coming out, expected to be slightly up. Probably not too detrimental for the dollar as we build up to the NFP. Reason being is this is a weekly event, and although it's high and important, a 2K increase is less than previous weeks, where there's been anywhere up to 9K increase. So, this is something to just keep an eye on, another precursor perhaps to the NFP tomorrow. Remember, NFP means non-farm payrolls. It's employment outside of the agricultural sector and military. So we're talking more manufacturing, service providing, stock markets, Wall Street, things like that. And this is and retail, of course. So it covers a lot of the employment sector. And this is another precursor. And obviously, for Jerome Powell's testimony continues today. As we look at tomorrow out of Europe, so Euro USD, this is our economic calendar, by the way. You've all got access to it. And what's really good about it is it tells you the pairs that are likely to be affected, like here, Euro USD, and it shows you the pip movement of what's happened before. And you can access the charts directly through it as well, and information to help you. But we see a lot of focus on a Euro USD tomorrow, PPI coming out of Germany. Why is this significant? Germany is now the biggest economy in the Eurozone. It's a manufacturer producer still inherently. So producer price index, how much the producers are paying for their goods, which has a knock-on effect to the consumers, aka us, and how much we're paying for things. And that would be CPI, consumer price index. So we can see here that that news is coming out tomorrow. They expect it to be slightly down compared to what it was previously. So a step in the right direction, but still minus. It'd be interesting to see the euro around that time. Euro USD, obviously NFP, but also the USD Canadian dollar as they have their employment figures coming out at the same time. Hence why a lot of eyes go on the US dollar, Canadian dollar. If you have good news come out of the United States and bad out of the Canadian dollar, that's when you can see some significant movement potentially. And as we can see here, there was a good pip movement as well. Sometimes it can be more of a, as we say in England, a loggerheads. So if good news comes out of the United States and good news out of Canada, there is still likely to be movement, but then that purely goes down to who is pushing more, how many traders are actually, let's say, buying the dollar at that time, and how many are buying the Canadian dollar at that time, etc. So that's when it can be more of a loggerhead situation. So that's the macros this week. A big day ahead, a big day today, and a big day especially on Friday. Do not hesitate to reach out to any of your allocated client relations specialists like myself. They're always here. They're happy to point you in the direction of relevant information, talk to about market news, things like that. If we actually then go on to the last topic, which was just to keep an eye on some stocks. First of all, good to have a look at Finviz here. It's good to show you the health of indices and each sector in, let's say, the United States could be the Nasdaq, the S&P 500, whatever it may be. You've got the German DAX, you've got the FTSE 100 out of the UK. You can look at them all on this site, and it will show you, for example, the semiconductors sector, aka artificial intelligence now, and microchips. Really healthy, really green. We can see certain other sectors that are less green and maybe suffering, and then we can get a vibe for how the economy in America is doing. If we actually look to relate to Nvidia, Nvidia have now become the third largest company in the world, which is massively significant, because I remember even as a teenager that they were just a small studio that did software for games, for video games only, really. Continuously growing. This is down to their massive influence in the AI sector. AI stocks, AI related companies have become very popular to look at. Microsoft, Amazon, they all use artificial intelligence as part of their technology now. And Nvidia are the godfather of that now. They have a big influence on that. So it's become, with the earning seasons coming up and you know, their performance and their within the AI industry, yes, this is pushing the stocks up. If we actually look here at market cap of it, this is a good website, Companies Market Cap. You have it for crypto too, called Coin Market Cap. It shows you the biggest companies, and it changes a bit like a sports league table. But we can see that at least in the top 10, the majority are tech-related companies, AI-related companies. You've got Apple here, Nvidia, Amazon, Alphabet, Google, Meta platforms. So the list goes on. Microsoft is still number one. Now, the reason that's interesting is, for example, Apple have announced that they are halting plans on their electronic vehicles. They're now going to focus more on the AI side of things for their software and go down that route just for this foreseeable future. It sounds like it's a jump on the bandwagon to actually, you know, increase their share price. But it's still, you know, something that a lot of people talk about is the AI sector, and it seems that a lot of these companies are trying to jump on and profiteer from it, because it's very attractive new industry that's being born here with artificial intelligence. So we can see here that Apple switches focus from electronic vehicles to generative AI. This ongoing situation, earnings come up, it'll be interesting to see. And yeah, it'd be interesting to see that how the share price of Apple is likely to go. From what I saw earlier, and I've got it on the MT4 platform here, you can actually see that Apple has been going down because it was a huge announcement at the time when they originally announced electronic vehicles, and now the fact that they're stopping that plan is not necessarily seen as a good thing, but it's more of a sit back. Let's see. It'll be interesting to see their earnings over the coming quarters as well. So that's in regards to Apple. And just one more stock to talk about, which was Starbucks. The reason Starbucks is because they seem to be off on their sales. One is competition, but two is also because there seems to be a worldwide boycott of Starbucks and other Israeli-related products or invested products. Obviously, it's not as black and white as that. You have consortiums, you have investors. This is how the industry and ownership of companies works. But in this case, Starbucks have suffered. It's not company collapsing damage here, but this is just to prove that when things like boycotts are announced and they're supported, they can have an effect on the share price. And in this case, Starbucks, just over the past week since this boycott has been really hitting hard, has already lost the best part of $4 or $5 in share price value. So it's right down to 91 at the moment. So that's the stocks for the week. Let me bring up the MT4 platform to have a quick recap. USDCAD, all eyes will be on that for the NFP. GBPUSD, movement has already happened because the spring budget is out, but a lot of focus is on general election news. So as of next week, there will be more economic events to keep an eye on there. Gold is climbing and broke all-time highs yesterday. The reason for gold's fuel at the moment is various factors. We know a big part of it is the Ukraine war, the Israel-Gaza situation, the Yemen situation is a big part of it too. But also we've seen out of Europe, they were talking about conscription over a week ago, and that pushed gold up at the time. We also saw that Russia reminded everyone that they have nuclear weapons. Again, that pushed gold up at the time, and now it's on a continuous climb because it was only as of 2 days ago, official scientists have come out and announced that the doomsday clock is now set to 90 seconds to midnight. What does that mean? It just means that we're closer to danger than we'd like to be. So obviously people want it to calm down. If we start seeing any events that might calm down, things like ceasefires, ambassador visits, these types of things can bring down gold in value. And we saw it break all-time highs yesterday, not surprising with the current situation of the world as it is. However, it's probably likely to, stand back. Let's see what happens in these particular situations. So I thank you for your time. We end it here. Do not forget to have a look at our Traders Hub. Thank you.